good morning, everybody. I'm sitting up here looking at some animal videos. Y'all already know how I do. I'm looking at some animal videos. It ain't no feet this time. They talk about some kind of like animals that stick around each other, like animals that stick with each other. And it was this one fish on there. I can't remember his name, but he stayed in the sea cucumber butt. It looked like a little eel. He looked like a little eel, but he just roll up on sea cucumbers and jump in their butt and live there without their permission. Look at it. He just roll up on it. Come here, boy. What kind of fish did he say it was? Pearl fish. It's called a pearl fish. It's a pearl fish, and he just live in the sea cucumber. But hey, cucumber, let me up. Let me get a piece of this here. Hey man, uh, I guess I separated a little weak from the tail yesterday with something that I said. I don't know. I don't care. But like I said, we on our journey to 2500, and when I looked at I know the other day I looked at the thing and it said we was like just got over 2400. And then after last night live, every time when I get to being me, I go check the numbers, and they had decreased some, so we was back under 2400. I said, "Oh, I done pissed somebody off." Hey man, good morning, good morning. Hey, wait a minute before we start, Marcia, how in the world do you be finding the video before I make it public? Because when I went in there, because I made the video last night and had it unlisted. And then I went in here just now when I came in from dropping off the boys. I was getting ready to make it public, and I saw it had 1 like. And I'm like, who liked the video? So I came into StreamYard, and I saw that you had left a comment. How do you find the video before I even make it public? You working with the Fed. You AI. Are you the person that's doing these AI scams with making it sound like they got their family members held hostage? Here to learn and share. Good morning to you. The birds are chirping. Good morning, good morning, good morning. What's up, Linda? What's going on? What's going on, Cuddy? You should have been a vet. I love watching the animals. What's up, Seawalk? What's going on, Kim? What's happening, Will? What's up, Lil Hawk? Mom's the word. Okay. Hey, man, good morning, good morning, good morning, good morning. If this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome. But I also want to give you the heartiest of the heartiest of the heartiest thank yous for tuning in to Tim's Tidbits every single day or whenever you pull up and hanging out with me. My homeboy Spidey back over here and my sweetie back there in the corner. She's the love of my life. You don't know who I am. My name is Timothy Lee Rogers Sr. I get on Algo's internet every single day and I talk about the price action. That's what I do. Why do I do it? To help someone like you get your aha moment when it comes to stock markets, trading, investing, blah, 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 blah. Now hit the subscribe button and get us to 2,500. Stop playing. Hey, man, let's go ahead and get into it. I came in here this morning. What's going on, Valdez? Buenas? Yes. I came here this morning to peek at the charts before I took the boys to school. And as soon as I walked in, Junior was finally like, Dad, I'm ready. But I did manage to see that we didn't do anything last night. We did not a thing. Where's my, hold on. I ain't got my trading view open. Let me open my trading view. I had marked out some stuff that I was watching last night on my trading view before I went to sleep. I have marked out some stuff. These are hourly candles. Don't need the dollar right now. I have marked out some stuffaroonies that I was watching. Some stuffaroonies that I was watching. This is the buy side liquidity that we didn't tap into. We still have not tapped into it. That buy side is acting like a booger. It's acting like a booger, I tell you. This right here is consequent encroachment of this hourly wick right here from Wednesday at 8 o'clock in the morning. This is the sell side that was residing up under the consolidation right around here. When I marked it out, it was before I went to bed. So it was before midnight. So it was up. There was the sell side under this consolidation. We were skating along the top of this consequent encroachment. And then I marked out these two 5-minute bissies engulfed inside of this 1 hour bissy right above this 5-minute breaker. That's also next to this mitigation block and this breaker right here. Right? So we got this mitigation block right here and a breaker right here, all in the same spot on the hourly level. And then we got a 5-minute breaker that's, you know, pretty much in line with the top candle of this hourly breaker right here. So I didn't want to mark everything on my chart, so I marked the 5-minute levels inside this hourly level, right? And for anybody who's curious as to why these are the only things that I marked out outside of this sell side down here in this daily low, right? I marked out the highs. The reason why that's the only thing that I marked out is because my thesis was that this was the draw on liquidity. This buy side was the draw on liquidity. We talked about this yesterday, right? And so since I'm assuming that this is the draw on liquidity, does it have to get there? No, it don't have to. But since I'm assuming that it is the draw, then I'm looking for a place where the market can potentially pull back to get a run, get a running start and attack it, right? So that's why I marked out these discount PD arrays, right? And what made me want to choose those? Well, just looking at it off the rip, what I initially did, I started out by marking out this hourly fair value gap right here, right? Well, let's go back. This is what I did. I looked at the hourly candles, right? And then I got a Fibonacci tool, came from this low, right? And went up to that high, right? So I said, okay, this is equilibrium right here, lining up with this hourly breaker right over here, right? Lining up with hourly breaker. Equilibrium is lining up with this hourly breaker right here. Marked out the hourly breaker over there, right? Marked out the hourly fair value gap. I'm like, okay, this fair value gap is in the premium, right? Look down here, said this fair value gap right here is all the way down deep inside the breaker. It's coming deep inside the breaker. I didn't check to see if it was past mean threshold. Right. So that fair value gap lines up with the mean threshold of this hourly breaker. Right. And I was like, that's a pretty deep drop to come all the way back down to attack some buy side that we're that close to. I'm like, man, that's too deep of a drop to come back down to attack that buy side when we came that close to it. If we came that far down just to attack that buy side, that ain't making sense to me. Right. So I went down to the 15 minute, right? Popped down to 15 minute, right? And then I looked at the I looked at the price action, still had the hourly stuff marked out. So okay, I'm looking over here. Okay, I see a 15-minute breaker in the same area as the hourly breaker. Marked out the 15-minute breaker, right? Looked over here, looked at the way the chart had moved. I said, okay, all of this right here, from here down, seems to be a balanced price range because of the way we traded with it. So all this down seems to be a balanced price range. So then I moved, I justified my Fibonacci to that low right there. I adjusted my Fibonacci to that low right there. What made me pick that low right there? Because all of this right here, from here down, right, appears to be a balanced price range, right? And then when we come over here, this candle right here is what left this area right there when we just consolidated for a little while. So I went from that low to that high, adjusting my Fibonacci, and that candle right there was lining up with the 15-minute breaker, right? And then so I looked at the run, and I said, okay, this fair value gap right here and this fair value gap right here are in the discount on the 15-minute. So I mapped those out, two fair value gaps in the discount in the 15-minute, in the discount on the 15-minute, right above the breaker, right? Then I dropped down to the 5-minute time frame, right? And I said, okay, boom, we have a 5-minute breaker in the same place, right? The 15-minute was over here somewhere. So I was like, we got a 5-minute breaker here. Now this right here is where I was I got a little torn on which one I want to mark out, right? So I was like, which one do I want to mark out? Do I want to because we had a mitigation block here, a breaker here, right? And a breaker here, right? So I was like, which one do I want to mark out? And so I was like, okay, I'm gonna mark this one because this one was the most pronounced out of all of them, right? This mitigation block wasn't really pronounced. That was a nothing burger, right? This breaker right here really wasn't pronounced. That's a nothing burger. It's in consolidation, right? Now, this breaker right here, that was pronounced because when we came up, right? When we came up here and made this high right there, we came down, then we came up and made that high right there. We dropped, boom, right there. They're gonna bearish order block, passed back through it later on, turned it into a bullish breaker. So that's why I picked that one there, right? And then over here, I just adjusted the 15-minute fair value gaps to the 5, because the 5-minute and 15-minute were very close, maybe like a tick or two off. Then I adjusted them down to the 5-minute time frame. So that's why I was looking at those levels, because this was in the discount of the move above the balanced price range. This fair value gap and this fair value gap was in a discount of the move. And then as you see, once we came and took out that sell side, we made our way down to that first fair value gap, got an institutional order flow entry drill. Then we pushed back up, got back above the consequent encroachment, came back up and whoop, stopped short again. One, what's the high on this candle right here? One tick away, 41.7750. One tick away from that buy side liquidity. One tick away from the buy side liquidity. Throw it on brakes and came back down. And we still haven't taken out the overnight low that was set at 615. Price didn't really do nothing, so we're not even going to waste time talking about that. I just want to share why I marked all that stuff out on the chart, because when I looked at the chart, I'm like, price ain't did nothing. I don't know what I'm going to talk about this morning because it didn't do anything. Let's go look at, for those who care, let's go look and see what the banks did. Let's go see what the banks, what in the world? Let's go. What was that? What did I click on? What did I click on? Oh, I must have double clicked something. Let's go see what the banks did. Who cares about the bank's earnings? Is there anyone in the chat who cares about the bank's earnings? Okay. JP Morgan, they beat and beat. Yeah, so green mean they beat. So I guess this was the growth. I don't know how to read the earnings whisper. When you first come in here, when it don't beat nothing, they have like the expected numbers there. And United Healthcare, they beat, so it was 20% more than expected. So I'm assuming this was the growth, and it was 20% more than expected. For earnings, revenue, this is the revenue growth, and it was 51% more than expected. So it was up 69%, and it was 52% more than expected, I guess. United Healthcare, 40% up, slightly better than expected. Revenue, okay. Expected Citigroup to lose, and they was up. Their revenue was up. How your revenue up 86% better than expected? Come on, man. Remember when I was talking about they moved the goalpost so close, it's like almost impossible for these companies to fail? How you going to be up 86% better than expected? How you going to expect them to lose 8% and they gain 12? I mean, it's 12% better than expected. So if you expect them to lose 8, if it's 12% better than expected, no, they lost 8 and it was 12% better than expected. So they was expecting them to lose more than 8%. So they lost, but they didn't lose as bad as expected. BlackRock lost 16.7%, but it was 3% better than expected. So they expect them to lose a lot more. What the haberdashery hemoglobin going on here? I don't know who they are, but they did terrible. Hey, man. What y'all got? What y'all want to talk about? Y'all want to talk about anything? I ain't got nothing. The price didn't really do nothing last night. Are there any questions for me? Since price ain't do nothing, I ain't got nothing to talk about. Are there any questions for me? I sat through that nothing all morning. You see, you're supposed to get up. Like what I do, this is what I do, right? If I happen to wake up in the middle of the night, I grab my phone and I look at the chart on my phone. And if I see it ain't doing nothing, I just go pee and get back in the bed. But if I see it like moving around and gyrating, then I'll do something. You got an idea? What's your idea? What's your idea? I ain't got nothing. Hey, let's do this. Since I ain't got nothing, let's do this right here. Remember yesterday when I was talking about how I extended the first gap we made the day before that we hadn't traded back to, and I extended it out to the next day because I be wanting to see, you know what I'm saying, when price come back to it. So excuse me. For the we ain't been able to do this in a long time. We ain't been able to do this in a long time. Connie says, could this morning swing high be the start of a Judas swing? All of the OG gang members know what I'm looking for. Shout out Chief. Remember when Chief pulled up on accident? Y'all know what I'm looking for. Where is it? Where is it? I need to clean out my uh-oh. I saw it. I'm getting close. I'm getting close. Where is it? Where is it? Where is it? I can't find it. I just saw something that looked like it. I saw the initial one. I got too much going on my screen. Where is it? It's killing the moment. I can't find it. There it is, right there. Oh, crystal ball. Oh, crystal ball. Connie Saddles wants to know, could this morning swing high be the start of a Judas swing? Swing, swing, swing. I don't freaking know. I don't know. Now, in all seriousness, Connie, in all seriousness, right? We try not to how can I look at it? How can I put it? Let price tell you what price want to do. Let price tell you what price want to do. Don't let me come on full screen to say it, because I'm trying to choose my words wisely, because there's a certain amount of anticipation, expectation, probability. It's a certain amount that you have to keep in your back utility belt, right? But it's a fine line that you got to walk between trusting the process and overthinking it, right? Trusting the process and overthinking it. What do I mean? There's a lot of moving parts to the ICT concepts, a lot of moving parts. And we can get into a state of being so close up on it, right, that we can't see the forest from staring at the tree, right? It's like, so don't get caught up on, hey, can that over there be a Judas swing? Nah. Anticipate the Judas swing before it happens. If you like, follow me, right? So don't look at price and say, hey, can that high or that low back there be a Judas swing? You're looking at it wrong, right? You need to look at it as like, okay, don't look these 5-minute candles. Don't worry about what the candles are, right? Price is here right now. Price is right here, right? Don't look there and say, hey, is that a Judas swing? Right? Don't look there and say, hey, is that a Judas swing? Thinking about it wrong, right? When price is here, right? when price is here like this, right? And we've been consolidating all night. We can't get back to this high right here, right? This high right here been giving us the business. 3 in the morning. This high been giving us the business, right? All night. We ain't been able to get back to that high, right? We came down and we flirting with this sell side, right? We finally break down and take out that sell side, push down into this fair value gap, and then we come back up, right? And we still can't get that high. And look at the rejection there, right? Look at the rejection right there coming up to this high, right? When you see that, right? And now, what's this? We coming up on 7, whatever. Then come here like this and say, next time we come up here and get a strong rejection off of this right here, possible Judas swing. Running above this high, possible Judas swing. Like, think about it there. Like, look forward for the possible Judas swing. We've consolidated. Just same thing with the London protraction, right? Let's just say we already know we didn't get it. We already know we didn't get it, right? But with the London protraction, right, we consolidate all through the Asian. The Asian just consolidating, right? Small, tight range, right? You see we ran up. You see we ran up all day long. Small, tight range right here, right? Just ignore what's going on now. So now when you see it consolidating here all night long, right? And then, right, we coming over here and we start to make a move, right? When we start to make a move, before the move like completes, you be like, okay, we got this sell side we've been messing with. We got this buy side we've been messing with, right? Whichever one it attack first, possible Judas swing. Possible Judas swing. Whichever one it attack, possible Judas swing. Look at it like that right there, right? Don't look back behind you and say, is that a possible Judas swing? Because if you're looking back behind you to see if this was a possible Judas swing, right, then it's like that's just you've missed that, and that's gonna sway you from really looking at what price is giving you, right? Because if you're thinking, oh, that was a Judas swing, it led us the wrong way and we came down, now we're gonna keep dropping. And if the market starts showing you I want to go back up, you're gonna tend to start fighting the market because you're thinking, well, we had a Judas swing, so we're gonna drop. That's why I say don't look back to say, is that a possible Judas swing? Look forward to say, hey, I anticipate a Judas swing to happen because of XYZ. We had a tight consolidation. We ripped off. We took out a high. We ripped off. We took out a low. You know what I'm saying? Turtle soup time. Something like that. Hopefully that helped. Oh, crystal ball. I see an implied gap on the monthly. Okay. I feel you. Oh, that's what I was going to say. Remember when I was talking about, yes, is the market open yet? Market about open. Remember when I was talking yesterday about when I extended out the fair value gaps, right? Let's go back. Remember, ICT talks about the first fair value gap made on Monday, right? And extending it out through the week. Let's go back and look at that and see how price reacted to it, right? Monday. This is Monday. I can already see before, without even drawing it out. Look how price came up. This is Monday. This Monday time frame here. Look how price came up and went across, consolidated for the whole week, and then we popped up there and we came back down and stopped down here and we reversed, right? I'm willing to bet that this area down here, somewhere either at this consolidation or at this reversal, that's going to line up with the fair value gap that was made on Monday, right? Because we traded away on Monday and we stayed above it the whole time, and then we came back down. The same way when I had them fair value gaps mapped out, when else like we was trading, we had been trading, you know what I'm saying, above the fair value gaps all that time, and then I wanted to see if we was going to come back to it or go back up to it or whatever, however we did it was. Let's go back to Monday and find it. Okay, so here we go. Monday, where's 9:30? The market is open. The market is open. The market is open. If you're going to trade, please trade safe. If you're not going to trade, please take a copious amounts of notes so you can go back and study what you saw today. And I'll see you at 6:30 tonight. And if you're not subscribed, please subscribe. If you get offended by things I say, please unsubscribe and never come back again. If you really enjoy it, please press the like button and share it with your friends and family. I thank you. So 9:30 in the morning, that's when we opened up. All right, so 9:30, we're doing a bunch of consolidating here. We had a fair value gap right there, but we quickly took care of that, right? We took care of that. Let's just find, we're going to find, this is the afternoon. So the afternoon, we never came back to that. Don't look like it. So I'm going to mark this out. I'm going to mark out the afternoons. Five-minute bissies. Mark out these afternoons. Cheese and rice. All right, some 5-minute bissies. And then let me see. No fair value gap there. So don't like we made nothing in the first 30 minutes. We didn't make a fair value gap in the first 30 minutes. All right, so there's no fair value gap in the first 30 minutes. We have a little something here within the first hour there. All right, let's mark that out. It's actually a couple of them. I don't feel like drawing out everything, so we ain't got nothing with that fell within the first 30 minutes. No fair value gaps was created within the first 30 minutes, but we did create small fair value gap there and a small fair value gap there. I'm just going to lump them together because that one's so little. I'm just going to put them together like that. And then really teeny there. Nothing to write home to mama about. And then we got a Sibby. All of it is in the same area. All this is in the same area. So I ain't going to bother marking that out. But they in the same area as that for the afternoon. Nothing within the first 30 minutes to mark out. We got that within the first hour right there. And then those are from the afternoon. Don't look like they ever got touched again. Right? So let's squash this down and go back over to now. Look at that. Look at that. The ones that wasn't touched in the afternoon, price came right back down to them right there. That first consolidation right there, it was on that first one from the afternoon, pushed down into that second one from the afternoon that wasn't touched. And then that very first one from the morning that we had already visited, that's the very first one that was made within the first hour. But it had already been revisited. And then, but yeah, came back to it on Wednesday. Came back to it on Wednesday and went up. The same way the other one, like I extended it out for like the next day. But like the ones from like the first ones he talk about that all the time. Like the very first fair value gap that's made within the first 30 minutes of the day of the morning session from Monday, you can extend it out through the whole week. And then the first one in the morning, you know what I'm saying? Like them first fair value gaps from that session, you can kind of extend them out. They be like important, like the price gonna refer to them. It ain't no guarantee of how it's gonna refer to them. It's kind of like a feel thing. And it's like one of the things where you just got the feeling and anticipate it. You know what I'm saying? And then, like me personally, the way I use these, right? I don't like hindsight 2020. And I always be like, man, Tim, if you would have just bought it, if you would have just sold it, like, but I can't bring myself to do it because that's not my trading model. You know what I'm saying? So what I do, I have them as reference. And I ain't gonna hold you. I don't always reference the Monday one. Like I thought about it while we was on live, and I say, let's go back and check it. But and we've talked about this before. I'm just talking about this now for like some of the newer people, right? What I do, I wait for it to get there and then let price show me what it want to do, right? Like the way I would trade something like this, or the way I would use something like this, is once it got back here, right? Once it got back to these fair value gaps, right? Right. So boom, like when price got back to this fair value gap right here, and we went up to this SIBI, we came back down and just started chopping. I'm just chilling, waiting, because we done fell all the way down here. I'm not trying to sell all the way down here, right? Because we really extended, right? So we kind of chopping, coming down, and we got down to the bottom of this one right here, right? So now I'm chilling, waiting for price to show me what it want to do. And now here it is. It's starting to make its way back up. You know, if this is enough of a breaking market structure for you right here, these 5-minute candles, these are 5-minute candles. You know, we came down, we took out, we came down, took out sell side, came down, took out sell side again, came down, took out sell side a third time, and then broke market structure to the upside right there. If that's enough of a breaking market structure for you, then that's a trade, because you got a breaker there. You got a fair value gap there that we trade back into the breaker, into the fair value gap, and we keep moving up, right? That's a clean setup when you take liquidity the third time, and then break market structure to the upside. That's ICT be calling that a bread and butter setup. Matter of fact, shout out Lex. She the one who really pulled my coattail, because she used to call this rising bread, and on the sell side she used to call it melting butter. And what is that? When you take liquidity 3 times, 1, 2, 3, and then you break market structure the opposite way, she would buy or sell off that breaker right there. It don't matter if it was a fair value gap, therefore she did it on the breaker. She didn't pay attention. She called it the rising bread and the melting butter, because ICT called it a bread and butter setup. Run liquidity, run liquidity, run liquidity 1, 2, 3 times, break structure on that last run right there. And that's why that's where I get. You remember what I said? When we take out that high or low that ran the liquidity, that's important. That's why I always say that, because that's a part, like that's a part of that bread and butter setup. Taking liquidity 3 times and then reversing and doing a breaking market structure the other way, right? Because this high took out that low. So when you break that forms a breaker, right? That forms a breaker, and that's also part of that bread and butter setup. That's why y'all always hear me say, when we take out that high or low that ran that liquidity, that's very important, because we're making a breaker, and 9 times out of 10, it's a part of that bread and butter setup. Yeah, man. Hopefully I was able to help somebody with that. Since price didn't do nothing, I just had a quick thought of something I wanted to try to share, and then it led into something else, and then it led into something else. Hopefully y'all got something out of it. No, nobody makes it. Nobody makes it. You're very welcome. ICT is a boss with price action. Yes, he is. Hey, I appreciate y'all for hanging out with me, man. Repeat that rising bread and melting butter strategy again. I need to write that down. No, rewind and look at it. So the ICT's bread and butter setup, the one that Lex Millie coined, melting butter and rising bread. She coined it melting butter and rising bread because on one of ICT old videos, he called it a bread and butter setup. He was like, this is my bread and butter setup. So it's the same thing going both ways. But when it's when you're getting ready to buy, Lex called it the rising bread because the bread rises and you're buying up. When you're getting ready to sell, she called it melting butter because the butter melts. And when something melts, you think about going down, right? So what it is, you're looking for a liquidity run 3 times back to back, right? You're looking for a liquidity run 3 times back to back, right? And then a break in market structure. You know what I'm saying? But it's going to be, it needs, like everything, it needs to be, as you got to know when to hold them and when to fold them, right? So in this case, you're coming down to a discount PDub rate at a destination, right? So you take out, you know what I'm saying, you run the sell side, like you come down, you see right there, we wicked out, then we came back below it, right? Once we come back below it, now we're down here in this discount destination, this old fair value gap we never revisited from early in the week, right? Boom, we're at a destination after we done ran out some sell side, right? So you got 1, you got 2, you got 3 times that you've dipped under this sell side that you just ran out at a destination. 1, 2, 3, and then you immediately reverse. You ain't dilly-dally. You immediately reversed and took out this high, creating that breaker right there. So when you trade back into that breaker, that's the bread and butter setup, right? That's the bread and butter setup. Take out the liquidity, right? You dip up under it 3 times. 1, 2, 3. Immediately reverse when you've come to a real destination, higher time frame type stuff, right? And form a breaker, then go. It's just in this case, it happens to be my own personal setup where we got a fair value gap right there at that breaker, right? The fair value gap just strengthens the you know how people grade their setups, like A plus, B, C minus. I don't grade my setups. I just look for I look for my fair value gap with my breaker, you know what I'm saying, after taking liquidity, right? But 3 times dipping under or above that liquidity, and then a break in market structure the other way, trading back to that bullish or bearish breaker. You're welcome. Look at the spot. It's doing bread and butter right now. Okay, cool. Thank you. I will watch the video. Always do. I just appreciate the simple breakdown as well. You're very welcome. Well, that's it. We 44 minutes in. I'm about to let y'all go. I appreciate y'all as always, man. If you're going to trade, please trade safe. If you're not going to trade, please take notes on what you saw today so you can go back and study those notes. I appreciate y'all, man. I think I jotted down a note I want to share with y'all the other day. Oh, yeah. I wrote this down the other day. I can't remember what video I was watching, but it was on the 11th. And ICT, he said, volume imbalances will act as magnets until a candle body covers it up. So if you're watching a volume imbalance, whatever time frame you're watching it on, just pay attention to see how price reacts to it, right? And he said once a candle body covers the volume imbalance up, then he'll take it off his chart. But until a candle body on that time frame covers it up, right, until then he keeps it on his chart. So this 5 minute candles right here, right? So like this volume imbalance right there, right? Right, that volume imbalance right there, we're gonna make that red, I think. Let me see. That's close enough. That volume imbalance right there, right? You see how this 5 minutes, so you got wicks, 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 wicks. It's staying on the chart, right? Once a body covers over it, now boom, he'll take it off the chart now because the body has covered the volume imbalance, right? He'll take it off the chart now because it's like he's expecting price to act as a magnet to this, you know what I'm saying? Come down, go to it, go to it, go to it, go to it, come all the way down, go to it, right? Now, once it's covered up, now he'll take it off the chart because it's it, and then you can see here it's still respected it and stayed on top of it because once we got up back above it, used it as support, but he's no longer looking at it on the 5 minute 5 minute time frame to have that attractive characteristic to price anymore because the body has covered it. Just want to share that for people who don't listen to the boring stuff. I had wrote that down the other day. I meant to say it in it because it was from the 11th. I didn't. It said live stream, so it must have been like a YouTube live or something. Yes, 4/11/23 live stream, but I had wrote that down because I was like, oh, that's a gem. Let me share that with the people who don't like to listen to Michael talk. Thank you. You're far too kind. For all those who stuck around this long, hey, you got a little gem at the end of it because I know ain't nobody gonna come back and listen to this whole video like that right there. Oh, okay. Now I get it. Bread and butter. It's guns and butter. It's about the guns and butter. Who can tell me where I got that from? Somebody tell me where I got that from, and then we're going to go ahead and call it. Thank you. See y'all tonight. It's about the guns and butter. The guns and butter, baby. I know y'all know where that come from. Jody. Hey, man, y'all too slow on your typing, man. I'm finna get out of here. Baby boy, there you go, Will. Baby boy, I appreciate y'all, man. I'll see y'all tonight at 6:30 for the price action recap. Gone.